Hello, this is Brian Resney, President of Resney Wealth Management. Just bringing another update this week about the economy and the investment markets and kind of giving you an idea of what we see out there and what we like and what we don't like. First off, I want to start off with really, probably what I don't like, which is, based on last Wednesday, Thursday, the EU came out and there really looks like they are serious about getting a resolution and getting their financial situation or house in order with their banking system. Their banking system is 4 times the size of the U.S. And really, what they want to take off the table is really a Lehman type exercise that we had back in 2008, where our markets fell apart because of the banks and the leverage and the debt and the bad credit. So it looks like they're addressing it pretty hard and fast. We're still waiting for some details, but it looks like they're serious and they're getting the job done, and they will. Then, of course, on Monday comes around Tuesday, and now Greece basically says, you know what, we don't know if we, totally like the plan. We're going to have our people vote on the plan for the EU to basically bail us out. Market, of course, drops off, sells off, 3-4%, and that's, obviously what I don't like. What I do like, generally speaking, is it looks like the U.S. economy has definitely stabilized. Slow growth. It looks like the emerging market economies definitely have stabilized. And, people were looking at maybe a hard landing for China, meaning their GDP was going to slow down quite a bit. It looks like that really is probably not the case at all. Most emerging market economies, to be honest with you, are doing quite well. Most emerging market economies are growing GDP right now between 4 and 9%. We only wish we can grow half of that, to be honest with you, in the U.S. And the reason we're not growing more is really because unemployment and deleveraging in our environment. The consumer in the U.S. is deleveraging. The government needs to deleverage. This is going to be a long-term process with fits and starts. We continue to follow our investment strategy. The one thing that we will be doing is stepping up our relative strength reallocation on a monthly basis, kind of at month end instead of doing it on quarter end. It'll give us a little bit more chance, in my opinion, for some additional upside and or protection from any downside if things truly do get worse in Europe. I think today, more than ever, following a disciplined risk strategy and investment strategy is important. Now, I'm going to tell you, folks, the last 3 months have been just really up and down. Our intermediate, short-term, intermediate, and long-term indicator market trend all triggered sells, and we basically raised a lot of cash only to basically have things bounce back in 3 weeks because of rumors what was going to happen in Europe, and the market bounced greatly back. We will get some false calls occasionally. I'm going to tell you that right now. We're going to have some short-term bouts of underperformance. But at the end of the day, if we don't follow an investment strategy, you don't have an investment strategy. And I hope you truly understand that. But what we are going to be doing is stepping up our reallocation to our relative strength GTOP portfolio every month. Based upon our back testing changing monthly, it actually brings down the volatility even a notch lower, and actually has helped increase return. So we are going to be doing that, and I feel that is a prudent exercise today because of some of the excess volatility and maybe some of the increased risk we're seeing from the EU or the Europe situation. I don't think the world's coming to an end. I do think we're going to muddle through this growth. I think deleveraging is a long-term process, especially in the U.S., which ultimately will be positive. And what I would tell you as an investor, whether you're 70, whether you're 80, or whether you're 40, if you're not a 3-year mindset person, meaning you can't look at a 3-year time frame, that it's going to be very hard to generate positive returns, in my opinion, over the next short-term 6 to 12 months. You need to really be conscious of, we're going to have fits and starts, we're going to have bouts of maybe some down, we're going to have bouts of up, and I see a little bit more volatility because of this EU situation until this is ultimately completely resolved, which will take a little bit more time. I am confident in our strategy, I'm confident in what we're doing, and again, as always, if you have a question about your portfolio, if you're concerned about your money, give us a call. We always appreciate phone calls. We want to keep you up to date. If you need that warm and fuzzy, that is exactly what we're here for. And as always, if you have a friend or neighbor or coworker or family member that needs professional money management, we always do appreciate referrals. Give our office a call, either with questions about your portfolio, or if you do have referrals, we always appreciate those, as I made a comment. Until next week, make sure you have yourself a safe and prosperous week, and a profitable one is really in the cards, I'm hoping, as we get through this year-end scenario. Have yourself a great day. This is Brian Resney.